Hello, this is Jordan. This video is being recorded on the afternoon of Tuesday, February 7th, 2023. Thank you for joining me. In this video, I'm going to discuss some potential negative short-term fundamentals for gold with respect to maybe the next month or 2 months. And I'll just start by saying sometimes you have fundamental corrections in markets where there's a real fundamental reason. Other times you just have a technical correction because the market got overbought and it's just correcting that condition before it moves higher. But with respect to gold, and given the fact that we're not yet in a new secular bull market, I mean, there's so many things that can go on with all these types of moves. And, technical analysts can draw lines everywhere and make predictions, and I do that as well. But it's important to understand the real macro fundamental drivers of gold, even in the short term, because that's what's really driving the moves. And so you have to understand how long those might go, if they might continue, if they're going to reverse course, et cetera, et cetera. And so I just have one chart today, and I'll let you get familiar with it as I'm talking here. So the recent move in gold, the recent rebound, of course, it was driven in part by dollar weakness. Given the decline in the dollar, gold probably should have performed better, but that's, but I digress. But that move could also have been driven by the expectation that the Fed's coming to the end of its hiking cycle. There's not that many hikes left, et cetera, et cetera. And, I even mentioned this in a video at some point, maybe a month ago or a couple weeks ago. We're talking about the 2-year yield, which the Fed follows. If that were to break below 4%, that could be a real bullish catalyst for gold. The gold move could have real legs to it. But given the employment report and, other factors to strengthen the stock market, that is now pushing up yields, at least in the last, couple of weeks. So at the top there, we can see the 2-year yield. I had that line drawn in my last video when I talked about this, around 4%. And the thinking was if the 2-year breaks below 4%, maybe it has an accelerated decline to 3.5, 3%, then the Fed is done. Well, the 2-year yield has bounced off that support, and also the 10-year yield as well. So bond yields did not break down. They're rebounding, at least with the 2 years rebounding from a little bit of support. The stock market continues to trend higher. Gold is undergoing this nasty correction. And so there is potential for the stock market, especially given these breadth indicators, to continue higher over the next month or two. And when we see that happening, that's going to, embolden the Fed to not give any hints that they're done hiking. I mean, they're being very careful about their words because they're not going to be able to hike to 6%. They're up to 4.75 now. But, the market is probably thinking, well, if these things continue, maybe they hike to 5.5%. So what drove gold, the thinking that the Fed's really close to being done. Now it's, the market's kind of doing an about face on that. Well, maybe the market isn't done. The Fed's going to continue to hike. Now we know that they're not going to be able to hike to 6% and higher than that. So I don't think this is something that, this bearish development for gold in the short term, I don't think this is something that can continue for 3 or 6 months. But nevertheless, it is important to understand that there is potential for yields in the short term to continue to go higher. That 2-year yield's at 4.47. Maybe that's able to climb up to the high. Maybe it makes a new high. Maybe the 10-year yield does not make a new high, and that's the signal. And so, at the bottom there, you have the real 10-year yield, and that has potentially put in some kind of, a double bottom potentially. So that could also move higher in the short term. So these are just all the reasons why there could be added pressure on gold, at least in the next month or two. At least, that's what I'm thinking. And, here we can see, it's not smart to rely on correlations all the time, But just as a guide for what's going on right now, we can see if you look at the chart, gold had this big move down last year when if you look at the 10-year yield at that point went from 2% to basically 4%. And if not for if we look at where gold was in at the end of 22, if not for the Russian invasion, which spiked gold temporarily, if not for that, you could look at the 2-year yield and see, wow, I mean, it went from 1% at the beginning of 22 all the way up to basically 4.5%. And look, if you focus on specifically the March point to October, the end of October when yields peaked, that's when gold fell from 2050 down to 1625. And we can see as yields kind of got toppy there, corrected a little bit, that's when gold had its move, its rebound. And so, there's nothing really groundbreaking in this analysis, but my point is this is something to keep an eye on because over the next, 4, 6, 8 weeks, maybe even 10 weeks, or maybe it's just 3 or 4 weeks, you could have upside pressure on bond yields. And so in that scenario, you would have more downside pressure of gold. And so, with that said, ultimately, we have to continue to watch the stock market in the economic data because, the catalyst for gold is really obvious. Whenever the economy falls into a recession and inflation comes down, inflation expectations plunge, and then the market discounts, lower bond yields. The Fed follows the market, then they have to cut rates. So that's what gets gold going to 2,100 and beyond. Of course, the question is it timing? Is it going to be the middle of this year, end of this year? We could definitely say it's not going to be in the next month or two. I can confidently say that. But, again, beyond that, the timing really remains a question. It could be anywhere in the next, 4 to 12, maybe even 4 to 15 months. We'll see. But that's basically the point of this video. In the very short term, there are some potential negative fundamental drivers of gold that we have to understand. Look at it, and at the same time, the dollar's rebounding. So that's also going to put pressure on gold. So bottom line, gold, maybe not that close to the Fed shift yet and the breakout. I still think it's probably going to happen this year, but we'll see. Those are my latest thoughts. I know that's a lot of rambling, a lot of words for just one chart. Let me know what you think in the comments, and I'll talk to you guys again in the next video.